Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, Apple partners with OpenAI to bring ChatGPT to its devices in a new AI push, as well as that markets hit as Macron calls snap French election after Le Pen's EU vote victory. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with Apple and ChatGPT. Now, Apple has now announced that they will partner with OpenAI in a new move by the tech giant to integrate the AI technology of ChatGPT into all Apple devices. This comes in a speech made on Monday by the Apple CEO, Tim Cook, who has provided stakeholders with a vision of pushing Apple products forward through the use of generative AI and large language models. Now, this is a very significant piece of news, which really we weren't expecting. I mean, a few weeks ago, actually just over the past month or 2 months, really, we've spoken about Apple's recent stab and effort to kind of develop their own AI, team division to really expand on the kind of product that AI is becoming and integrate that into, of course, their AI devices. As you know, Apple really does have that kind of distribution network through the kind of countless Apple Mac products. But ultimately, as we know with shareholders and other investors in Apple, investors have been very upset with Apple's actual progress with AI, and only up until recently have Apple even put their mind to the topic of AI and have started to bring in new AI developers and workers and startups and integrate that into the Apple ecosystem to start building on those kind of Apple intelligence features. Because ultimately we've seen other tech giants such as Microsoft, which of course have greatly invested into OpenAI, but also Google, of course, with their own AI products and AI search tools, but also we have the likes of Meta and other smaller kind of tech giants, which have also developed their own AI teams and really have had great successes. And those companies are really the ones that have been battling it out during this time of kind of acceleration, during the kind of AI boom, during the AI revolution is the kind of better word, better phrase to kind of term that with. So ultimately, long story short, Apple has really lagged behind in this kind of AI revolution, with other tech giants really investing loads of money and building out these massive teams. And we recently spoke about that with Twitter, X, now formerly known as Twitter, with Elon Musk, of course, building his own AI company, XAI, and of course that has required a great deal of financing, and that's acquired record levels of financing actually, and obviously that's already being integrated into the X platform. So of course we have all these tech giants that are really working to kind of produce the best AI models and integrate that into their own products, yet for the past year or 2 years or recent months, Apple has made little effort to kind of build on this kind of AI topic and integrate that into Apple products. So when we now that we've received this kind of new news to do with OpenAI and then partnering with Apple, for me, I'm personally quite surprised, because it was really within the last few weeks or last month or two that we really started to see Apple start to make their own efforts to do with building their own dev team, buying or kind of integrating AI startups into the Apple team and that kind of thing. It's only recently that we've started to see that, and really we would be expecting such kind of action where Apple's partnering with another AI company. We'd expect such action like that back when, of course, Apple wasn't starting to integrate AI startups and wasn't all of a sudden starting to invest loads of money into building AI developer teams. So that's why I think this is quite a surprising move. But of course, this kind of settles the nerves of, pardon me, those investors that were, of course, very worried about Apple's shape during this kind of AI revolution, as the lack of progress made by Apple within the AI space was making shareholders very, very worried as shareholders started to worry that basically Apple was falling behind in every sense possible, because this kind of drive towards AI is a very key one for these tech companies. And if you have the likes of Apple, a massive tech conglomerate that's not even kind of expanding on this industry, then you have to start to worry about the management and that kind of thing. But Tim Cook's now come out and of course announced this new partnership, which will be very interesting to watch play out, and it will be very interesting to see how this does kind of work, as of course these two will now be kind of somehow trying to fit one another, their teams, and mix and match their teams to kind of generate these new Apple intelligence features, with Tim Cook and others on the Apple team outlining the upgrades which are to come to the iOS system during Apple's annual developer conference on Monday. Apple looks to utilize the power offered by AI in an effort to produce a far smarter Siri voice assistant, whilst also creating more personalized features on Apple devices in order to increase productivity. This all obviously comes after months of shareholders and other investors complaining about Apple's efforts within the AI scene, which has seemingly left Apple behind its competitors. The key tech giants of Alphabet, Microsoft, Amazon, and Meta are all racing to develop new products which incorporate AI, whilst also absorbing other AI startups. Microsoft has made a particular name for themselves in this effort by investing billions. The OpenAI partnership with Apple offers features which are being termed Apple Intelligence, which will be based off Apple's own models and will focus on the user experience. Apple also made it clear that user privacy was a priority as a part of this move, and all AI models would be running locally on devices as well as on their own cloud servers. So an interesting point to be made there on how Apple is looking to mitigate the possible security issues which of course do come with any of these kind of large partnerships between massive tech companies. So a very interesting move there by Apple. And of course, this forces investors to now start to kind of create their own pictures for what may come of this partnership and what those, Apple Intelligence features actually will look like. And it will be very interesting to see now over this week, and especially today, how this starts to be factored into Apple's price, as of course traders will start to, either predict, great success through this kind of partnership, or, actually a failure, the clashing of heads between these two partners, and as a result a sell-off maybe in the stock. So that's why you need to keep your eyes on Apple today and over the rest of this week really. That's all to talk about on this article though. Next article will talk about returns to a topic which we of course covered in to a great extent yesterday after of course the EU elections, with Macron of course calling a snap French election following the very strong victory of the more right-wing parties within the kind of European Commission. Now Apple has now announced that they will partner, I'm going back onto the last article there. No, the French and general European markets fell on Monday following Macron's decision to call a snap parliamentary election following the recent result of the EU vote. This comes after the European parliamentary vote proved that the far-right Marine Le Pen movement was far more popular than his own centrist alliance. Now, of course, that is what we kind of covered yesterday, but I think there are some other kind of important points to be made on this topic as well. We know, of course, that in Germany, the likes of Olaf Scholz, representing the more social democrats of Germany, of course, had a very poor performance during those EU elections, with both the CDU, so the centre-right party of Germany, coming in far above Olaf Scholz's party, coming in at 30% or just above, I can't remember exactly, and then of course the AfD representing the other parties within the EU coming in above the Social Democrats as well. So as a result of that, there was a very worrying image for Olaf Scholz's coalition, as this kind of represented the right winning in that election. unlike what we've seen now with Macron and his, calling of a French election, Olaf Scholz has made it clear that he will not be calling such an election, with the next German election being expected to take place next year. So it does seem like we will be waiting on next year for that election to take place. And why that's, of course, very important to know is because not only is this election, the Macron election, adding to the market volatility, as we'll get into, because that's adding on to what we're receiving with the British election this summer, but also, of course, the US election during autumn of this year. So if we also had the German election being pushed onto the top of that, of course, things would become far more volatile within the markets, especially for European markets, with the British, French, and German all taking place within the same sort of time. So that's why that's kind of an important thing to clarify. With this news causing a significant sell-off in French stocks and bonds, which had the knock-on effect of pushing European indices down. The market volatility can be understood to be taking place as a result of the political instability and possibility of an extreme government coming to power, worrying traders. Sunday's EU poll showed that Le Pen's party secured 31.4% of the vote compared to Macron's party alliance vote, which achieved only 14.6%. This led the CAC 40 stock index to fall to its lowest level since February over Monday. Macron justified the snap call for the parliamentary election on the belief that it was needed to break the so-called political fever and was needed to clarify the future of France. So a very interesting move there made by Macron, and I think yesterday we covered the actual reasons why maybe Macron actually called this election, which is that basically he's looking at the momentum that Le Pen is gaining, and he's seeing that, when 2027 comes and the next election, I believe, takes place for the French Parliament, he's worried, of course, that Le Pen will have greater power then, greater momentum then, and therefore garner far more votes then than she would now. And as a result of that, he's looking to kind of take this snap parliamentary election, achieve a kind of coalition government, and therefore kind of ease the kind of issues which may come of a total far right victory for in the French election of 2027. So that's what I believe we read into yesterday. But that's all to talk about in this article. Very important to note, of course, to add to our understanding of possible political instability within Europe and how that affects markets. So that's always something that's important to think about, especially because we're receiving quite a lot of important economic news this week as well. So all of that's all adding into the current issues to do with politics as well. So lots to talk about there, but all covered on the articles. Next to talk about is the charts, like always, beginning on the US 30, the Dow Jones, more broadly talking about US indices as a whole. But really, there's not as much to say on the US 30 as we usually might, with nothing really happening over Monday for price. Now, of course, we started off the week, and in yesterday's weekly market briefing, I of course hinted towards the kind of levels that we were sitting at and what might happen as a result of where price was sitting at. As I did note that price had recently come into contact with that 50% Fibonacci retracement level and key liquidity zone, and was currently just sitting around that level. So we did note, of course, the possibility of price swinging once again to the downside and selling off from that level to push even further lower. Of course, though, we have not seen that take place just yet, over the course of Monday, and instead we've seen price continue to hover around this kind of key liquidity zone, key resistance level, and really not much has happened over the course of Monday, and therefore it's important to clarify these positions and areas which price could still interact with this week, as of course we must remember the amount of economic data that's coming out this week, including the Fed's interest rate decision, as well as also the CPI figure that we'll also be receiving this week. So those two pieces of information are possibly the most important to how markets do, of course, perceive the Fed's monetary policy, and therefore how markets are affected on that macroeconomic scale. And so that's why possibly we're not seeing much movement take place just yet, as often markets do trade sideways when we're anticipating news. So that's always important to obviously keep on your mind. That's all about the US 30. Next talk about is to do with the dollar. which of course made a significant move ending off last week following that kind of NFP figure coming in and showing a massive expansion in the number of workers within the US economy, taking economists by surprise and therefore pushing the dollar to the upside as individuals, as traders started to price in the inflationary pressure within the economy and therefore pricing in the factor of rates staying higher for longer within the US economy. And that's why we really did see this massive swing to the upside with price breaking above this key liquidity zone. Now, over the course of Monday, as we spoke about on the weekly market briefing, we spoke about the fact that price was kind of sitting at this triple top level. And the question was, of course, whether price would be able to stay above that level, break above that level, and then stay above that level over this week. So that was the kind of key question which we were looking for the answer, and ultimately, as we can see now, price did breach above that kind of double top level, breaking above that, not forming a triple top, but ultimately price did not stay above those kind of higher levels, and instead price has now sold off and is starting to pull back below that kind of double top zone. So price did not all the way meet or reach all the way up to this kind of key liquidity zone up around this level, and instead kind of fell short of that and sold off just before price reached around those zones. So it'll be interesting to see whether price will now make its way back into this liquidity zone, which of course formed the kind of double top that we saw earlier, and whether price will now will either break below that kind of key liquidity zone and return back down into this range, or will price bounce once again off this key liquidity zone and then possibly move higher. Next to talk about though is Euro USD, if I can load it up, which did start off the week with this massive gap to the downside, which we were kind of speaking about during the weekly market briefing, as that was kind of happening as I was talking. But over the course of Monday, interestingly, price did make its way down to this key liquidity zone that we previously noted. Well, actually, I kind of drew across in yesterday's weekly market briefing as the next level which price would most likely interact with and then move away from. So price has now kind of injected itself into that area and is now moving back to the upside. It'll be interesting to see whether price does reach this previous area of liquidity, this previous bottom, and then possibly use that area as an area of resistance and then sell off from that area once again. So we'll have to wait and see, of course, but it'll be interesting to see how these moves are made off the back of that NFP figure last week, when we do have such important economic data also coming out this week with some key Eurozone economic data points coming out, but also of course the Fed's interest rate decision and the CPI figure. So those two figures are of course weighing greatly on anything dollar related, and that's why we may see price moving to the side. But then again, we do have this very important 3820 Fibonacci retracement level lining up with that key liquidity zone. So it'll be interesting to see whether price can move into those levels and react with those levels and that kind of thing. Next to talk about though is pound yen, which we can't say much for at the moment. As I noted in the weekly market briefing, I noted that price had recently interacted with that 3820 in key liquidity zone. So the question was, of course, whether price would now swing to the upside. We haven't just seen that yet, but price is still staying at these kind of higher levels, still just below the 200 yen for a pound mark. So definitely keep that on your mind. The fact that this area is acting as a key psychological level for price to which price is failing to break above, really. So it'll be interesting to see how price does move around these levels over today and then the rest of the week. Next to talk about though is Bitcoin, where price was sitting on this kind of 50% Fibonacci retracement level after interacting with that 6180. So we were kind of talking about another swing to the upside. We haven't just seen that yet, but price is not moving to the downside. So price is just stagnated where it is. It's just holding just below, of course, the $70,000 a Bitcoin level, which on Monday price actually tested once again. So definitely keep that on your mind. Next about is gold, which was kind of down at this Fibonacci extension level of minus 27.2% to start off the week. So I did note how it was likely that, price would relieve itself, move back to the upside after reaching this extension level as individuals start to buy back on those shorts, and that's why we're now seeing this kind of retracement back to the upside. The question is, of course, whether price can retrace enough to reach that kind of key liquidity zone, which lines up with that 38.20. So that's the kind of key level that we're waiting to see whether price can make its way up to, as of course, that is a key area which price may come up to and then continue down from. Lastly to talk about though is oil, which has continued this kind of bullish move made over the course of last week, and starting off the week has continued this by this bullish spur to the upside, breaking back above this key liquidity zone around $81 a barrel for oil. So very key psychological level which price is now broken above and is holding above that 61.80. So very interesting moves made on oil recently, which could arguably is based on certain news coming from the Middle East. So lots to think about there, but that's all to talk about on the charts. Lastly, to talk about, like always, is the economic calendar, where, to be honest, I think we're receiving the least amount of economic data that we've looked at in quite a while, as we're only receiving the British unemployment rate figure, which I must not understate is a very important figure, so make sure you're listening out for that, especially if you're looking at pound yen and that sort of thing. And lastly, we're receiving the Canadian building permits figure. But that's all to talk about on the economic calendar. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.